January, Monday, and this is Monday's chart, 8th of January. Here as you can see, and the market is going down slightly, but as we could see that the US markets were up in the last session, VIX was down, and VIX is coming down. Let's look at the minute details over here at 15 minutes chart. 15 minutes chart, as you can see that the three red candles are going down. So today's market I don't see will end up much about like 21,900 doesn't seem like possible. Now let's look at for 11th of January. Our target is 11th of January. Let's come to 11th of January. So this is 11th of January, and let's remove all the drawings first. Okay, let's remove all the drawings, broaden this further. The daily chart, our day ends at this day, 11th of January. Okay, so let's start marking the current levels of break even. 20,963. So 20,963 comes around on the level here. Okay, so this is the level, very short level. Okay, this is the level, and the next level is 22,300. 22,300 comes here. Okay, so this is 11th of January here. So as you can see that these two ends are not gonna reach in next two trading session. It seems difficult. So even if we go like such big candle, seems like difficult aspect. Now what we can do is probably reduce the break evens and bring this in the center. Let's look at this 22,300 CE. So this 22,300 CE is something what we can book and come to 22,000. So I'll just eliminate this, exit, and cancel. Wait, I'll exit it all, na? Exit. We'll exit this position. Okay, this position is exited. Let's check out the margins. Margins is 3 lakhs, and yes, we can go here and we can go ahead and add it like 300 quantity. We can go ahead and add 400 quantity if that is allowed. Control A, delete. Let's add 200. Let's add 200 and check out 314 point. Okay, 14. Let's share this. Sell it at 14. Okay, 13.9. Okay, it is executed. Now let's check this out. 18, 22,000. It is 18. 2,000. It is 18. Like slots. That's how the strategy is modifying, and we can eliminate this. Okay, so this is how it looks like. What we can do, we can actually come down till 21,000 from the lower end. So currently, actually it's already 21,000. How come PE is at 21,000? Yes, 21,000 to 100 we can come down to, but I think that won't give us good results. Let's wait and then remodify the strategy. Thursday, and now it is 10. I'm sorry, we are still on Monday, 8th of Jan. It is 10:06 a.m. As we could have, we had adjusted a strategy slightly bit and increased the risk from the positive side. And then when I reload and check out, even in next day will still be positive. So what I'll do, I'll probably increase the risk of a 10 lots over here and just check out again. So let's just reload. Okay, and let's check out at 18. If I go at 18, 10 lots, in that's 18. Current market level of suppose it's 14, and I modify, and then if I go one day, I'll still be safe. I'll still be safe over here. So what we'll do, we'll probably just go ahead and add the remaining 200 lots. So here's the 200 lot addition, and we go ahead and add it. So it is rejecting. So input is getting rejected. What we'll have to do, probably we'll have to add 100 lots, add 100 lots. Okay, this is completed. what we'll do, we'll set with 100 lots. Okay, just pause for a minute. Okay, we'll adjust it to 17. Let's go ahead and adjust this to 8 lots and 17. And let's see how the strategy has changed. Yes, that's good. You can save it. I think from the lower end we can come to 21,100, but I don't think we'll get any value add over here. 21,100, and this is PE of 11 Jan, and you just check the out strategy. It's 5 rupees. So 5 rupees and 3.7. Here there isn't much value add. It's like 1.3 rupees, 1.4 rupees at max, and then there will be some losses in between. So that is the reason I don't want to move this forward. You can still save this strategy and keep. And I'll just show you how this strategy should look in one day. And from the lower end, it is now safe, and at the upper end, it's decent. And let's go to 2 days. So 2 days also will be quite safe. Okay. Now overall, Jan, let's just check out what we have earned so far in order to understand how much risk we should take. Currently, backend is quite slow. I think we'll check out this next time. So that's it for adjustments of today, and let's just observe the market and then decide what's the next move. Hello guys, welcome back. So again we are on Monday 8th of Jan, and I think there is some weakness in the market. What we'll do, we'll create a balance stuff over here. So the balance of our strategy would be basically to reduce this 100 quantity from here, and that would be like exiting 100 at 4. So here we go ahead, exit this 100, and limit is 4.2. Let's buy it and get done with it. Yes, now we can see that margins is a decent amount, and the strategy is quite balanced. Okay, 8.45, this is the balanced strategy. Modify, we can save it. Let's check out the VIX. India VIX is 13.3, that's fine, it's not an issue. And let's look at the strategy once more. So but still I don't know why the slope is looking like not as steep as this. Yeah, maybe something in the visuals. Yeah, save the strategy. Now let's just check out after 2 days how things turn out. So at 2 days in the center I still won't incur loss, and I think I can come back in the center later. So let's just keep it. I believe this should be the last adjustment of the day. uh, hopefully hopefully this should be the last adjustment of the day. Then market is not that drastic of a movement downwards, so maybe if it falls below like 23 21,100 or 200 or so, I might have to worry. But we are sitting on 235 and there is only 1 hour left, and I'm not surely sure even in this next 1 hour we can go below 21,400. So I think the fall will be arrested by till 21,400. So let's just wait and watch. I'm sorry, this is 9th of January, Tuesday, and this is 9:33 a.m. We saw that the market has opened the gap up, and it's looking like flattish. India VIX is down, and I think the market will still go upwards only, or it will consolidate between these two regions, 21,500. Hence, because it will consolidate between these two regions of yesterday's high and low, I think what we can do is from the lower end we can increase the risk and bring the market to 21,200. So currently it's at 21,200 looks like here. So what we can do is probably we can shift 2 lots. So we can exit this. We just get 2 rupees more by shifting 2 lots. So what we can do, if the margins permit, we can start selling this. What if we sell 100 quantity and at a limit? Yes, it is sellable. And if we modify it, okay, no need for modification. Now let's just check out the margins as 57, and that is a decent margin. And 21,200 at 4.35. Let's just check this out. 21,200. Okay. PE, it is sell. and this is of 11th January. Okay, so this PE, you can save the strategy. This is what it looks like. So even if the market reverses, we won't have much of a risk. Okay, only if it goes below 21,600 till 21,390, there is some sort of a risk. What we can do is probably we can take out this risk completely, and we can book this profits. 600 to 400 is the danger zone, and I don't think the market will end up in this zone. Okay, it's just highlighted red, so this is where it should not hold up. This is the danger zone. If it's lying anywhere else, we'll get some kind of a profit. So this is the danger zone. So we just want the market to fluctuate anywhere and just lie over here, or probably go downwards further. If the market is going down, I think it will go downwards further, and if it is lying here, then this will be a difficult call for us. We'll have to bring down the call. So for now, I've made this adjustment, and we will wait and watch how the market turns out to be. If you see the CE side is also, we have got some profits. Okay, so let's just wait and watch. As soon as we discussed it, okay, the market started moving downwards and showing some kind of weakness. Here this is 2, and I don't think we should keep our margins blocked over here. What we can do is we can exit this completely at 2.1, 2.15 buys. Okay, this is exited. Check our margins is 4 lakhs. Here it is 100 quantity at 4.35. Let's do the PE of January. Here we exit this. Okay. So now if the market goes downwards, it's not much of a risk. Okay, this is fine. From the upper end, it is 22,000, and it seems very unlikely it will go to 22,000. We have good margins, decent margins. We'll wait and watch. We'll observe how the market is moving. Based on that, we will react. So we meet again. 9:47 a.m. The market is looking weak. Not sure why it is turning back. It is coming to this region of a danger region. The overall VIX is falling down. What we can do is probably bring down this fall, or which we can do is probably exit this call. So the CE will limit our loss to 1000. Okay, margins are this and positions are this. What we can do is exit this call. This call is for 21,500. Okay, only if the market closes above 700, we'll incur some profits. Not really sure that will happen. Let's just exit this. So we'll exiting this. Okay, exit this call. Here, there's a strategy. Okay, so you can increase the risk at 21,200. How much? 4. Yes, 4 lots is fine. Can add 100 and sell at 5.75. I think this 21,200 and 22,000. So that is the range we're looking at. 21,200. Let's look at the daily chart. Okay, let's remove all the drawings. That was the wrong move, not indicator. Remove the drawings. Okay. Now 21,200. That is around here. Okay. 21,200 and 22,000. That is around here. Flown. So by Thursday, the market will cross these two levels. That is what it says, and it looks unlikely. Highly unlikely at this point of time. The market looks at a consolidation phase, and exiting this is a good idea for now. 5.76. Let's check 6 positions. Okay, 5.5. Okay, 5.6 is executed. It's 200. What we can do is exit this. It's completely exited. Okay, this is also gone. Let's just check out the positions. 22,000. I think 21,200 is fine. 400 here and 400 down. We can increase the risk at this 22,200. So we are here. So at the lower end, we just reload and save the strategy. Now the VIX has come down. Our effective VIX is 12.9. I can save. Okay, just reload once. So these two are the levels. Just save this. Now let's check out one day how the T plus 0 line. See, on the positive side we are risky. On the negative side we are not that risky. So what we can do is we can increase the risk on the negative side, and we'll go slowly. Currently the market is here. We can go 100 lots in, add 100 lots. Okay, that's fine. Yes, and the margins are 2.8 lakhs. This is 5.55 for 6 lots. Now we are still in the positive. What we'll do is 4,000 and the maximum is 8,000. So half of it we have already incurred. Now we'll wait for tomorrow, and tomorrow based on whatever is the data, we'll take a call, or maybe at EOD we'll take a call. So let's wait and watch for that. For now, as you can see, we are still safe. So if we take one day intermediate, we have a good range of 21,349 to 21,854. So this is a decent range, and we'll be okay. We'll be fine with this. Okay. Margins are also decent for slight adjustments. We can increase another lot over here. That won't cause us any harm. So let the market go downwards slightly bit. Okay, from this level. So we are at this level. If the market moves downward from this level, okay, I'll sell another PE. Let this line cross. We'll sell another PE. 6.3, 6.85, 7 at some 7 odd levels we'll sell. And then we'll wait and watch how the market unfolds, because this is a decent level. From here, even if we go at Wednesday, Thursday, if there is candle over here, Wednesday over here, and then I think we should be safe given the consolidation phase. Now you can see we are still in the consolidation phase, and the market has shifted upwards. And this is 9th of January, the same Tuesday. Improper position. I think this is executed. Let's just reload once. Okay, let's check out the positions, and yes, we have 400 this is 5.5, and we have 400 lots at both the end, and we can save the strategy. This is how it is. It's 12.9 India VIX. Here's the strategy, here are the margins. Okay, so this is like you can actually sell a triangle of 8 lots and not of 10 lots. So we'll have to become profitable enough to sell 10 lots triangle. So that's the first target. I think the margins will be released by tomorrow. So we are at 21,200 and 22,000. The rest all can be deleted. So yes, and these are both at 5 rupees. We'll now just wait and watch for another day and see by EOD what is the condition of the market. And this is at 4,600. If we wait for one day, this will go till 8,000 and we will still incur some profits even the market moves sideways. What we have to do is just wait and watch. Hello guys, welcome back. So today's strategy, as we can see, the open market, and this is 10th of January 9:29 a.m. and the market is sliding downwards, and we saw that there was weakness in the US markets as well, and so India VIX is higher, and also there is a slight bit of weakness in our market. Now let's look at the 5-minute chart to understand what is the rate of fall. So rate of fall is quite high. Yeah, there was a huge buying and yet the market could not go up. Then there are two red candles and volumes are pretty much as good as the first one. Market is going downwards. What we can see over in our strategy is basically we just have this 1 lakh of you know margin left, and our strategy is going downwards. Okay, here we are slowly moving into the loss zone. So the right choice would be here to exit the position because the market is moving very fast and the third red candle is also there. So if this is also red, I think we should exit it completely. Yes, and just get away with it. So whatever is the PNL, we'll have to take it. It's minus 684. So that's it, and then release our margin for some other work, and we can let this thing go. So we'll put a new strategy after some time, but for now we'll let it go. Okay. We had some 4,000 profit, but we have to let go of it. We have to close this. Okay, so wait and watch for the new strategy. For now, we are closing this. So after the market opened, actually market was trying to go downwards, but then it came back to normalcy, and unfortunately we incurred a 4,000 PNL. We had to let go of it, but no worries. What we'll do, we'll deploy another strategy. And today is Wednesday, 10th of Jan, 10:28 a.m. We'll check out the strategy for February, what all we can do for February. So let's go into the options. So first and foremost, what we'll do, we'll see where is the market lying, and this strategy will probably make it on the daily candle. We'll take 21,500 as the pivots, and directly for February we'll go ahead and buy the 22,000. 22,000 we'll go ahead and buy. Okay, 22,000 and 21,000 will buy. Let's just check out 21,000 PE. We'll go ahead and buy, and that is what. Now let's go ahead and buy 22,000 CE. 2,000 and this is the CE, that is what, and this is buy. Okay, now this is what we'll just go ahead and sell. We'll just go ahead and sell a 500 points away, 20,500. Just go ahead and sell this CE, sell this a couple of lots, and then we'll again 20,500 PE. What we'll do, we'll go ahead and sell this PE for a couple of lots. This. Okay, now you can see a very good Batman with a very broad forehead. So that's what the Batman is. Now in this strategy, what we can basically do, if the market swivels to any of the side, what we can do, we can start increasing the risk from the other side. Okay, so that is how we will go in this strategy. But for now, I'll also like to buy out the break evens. So whatever is the break even, I'll just go ahead and buy it. Okay, so here the max profit around 20,000, and here the loss can be around at 19,500. The loss can be around 32,000. Now let's just check out what is the 19,500. Is it even available to buy? Yes, it is available to buy, and just if you go ahead and buy one lot, and that's good. Here we can go ahead and buy it the 23,000 because we have sold 22,500, so we'll have to buy 23,500, but I'm not sure if that strike price is open. So strike prices is not open, so we have to buy 23,000 CE. If we buy the 23,000 CE, okay, so this is how the market will look like.
And market, we can put this strategy because market doesn't seem like it will go down so drastically. Okay, we can put this strategy and it will support with an upward bias, and the strategy will have an upward bias. That's what we can do. The lower break even is coming around 20,100 or something, and I think this is fine. We'll go ahead with this strategy. Okay, just wait. Let's observe the market first. How the market is going. Now, I think this strategy is something what we can deploy because I see there is an upward bias over here. Even if it comes downward, I will not have any problems in going multiple lots inside over here. Okay, 5,000, 20,000, and that's a decent amount. What happens now because of putting this strategy at the end moment, you don't have to worry if the market goes very fast in some direction. That is what is the problem. Initially, it will decay a lot. Just see how this progresses. See 18 days progress. Okay, so on the positive side, there will be a good bias. So what we can do, we can increase two lots on the positive side. Let's just go ahead and start deploying. Let's go to the third section and start putting the strategy. So 21,000 PE for Feb, 21,000 Feb, and 20,000. Let's go with 20,000 PE only. Let's go with 20,000 PE in Feb. Okay, and let's go with 20,500 PE in Feb. So this is the 20,500 PE in Feb, and we can clear this. Now you can see 21,000 PE, 20,000 PE, 20,500 PE. So these are the three items. Now what we can do is one lot we are getting 40 rupees. Okay, 4 5s are 20. That is 2,000 for one lot. Okay, so here what we can do is we can actually put 8 lots here. Okay, 8 lots from each side. 8 lots from each side of a triangle. Basically 4,000. 4 8s are 32, right? So we can get around 32,000 by just doing the strangle. So what we'll do, we'll probably just do the strangle and not really get confused with a lot of other things because we'll be closing the strategy in between only, right? We'll be closing the strategy in between. So let's just go ahead with doing the strangle and then decide the path forward. Okay, and we'll increase the risk in the strangle slowly, 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 slowly. So let's go with the strangle flow. Let's reload this strategy. Okay, let's portfolio builder. Okay, today is like 10th of January. I think the decay will be very good in 25th January. We'll start doing the strangle for 25th January. So we'll start with adding the position of options. 25th January, a triangle, bullish, iron condor, bearish. Let's take the non-directional. Okay, long directional. What we'll do basically here, see Batman strategy. What I told you now, Batman is getting quite famous over here now. This is the Batman strategy. If the market goes any direction, then we don't have to worry much. What we'll do completely risk defined strategy. That is the short iron condor. We'll take this. Okay, and we'll take the position for 20,000 PE, and we'll do it 20,000, 21,500, 20,000, 122,000. Let's go for 22,000. Okay, and the sold item will be around 21,500. This will be 20,500. Okay, PE, and here it will be 21,000, 21,500 CE. this is not looking so fair because we are sitting at 21,500, so we'll have to actually start selling like 500 points away, which is 1,000 points away. So it is 22,500, 1,000 point away, and 23,000 will buy it. Okay, 23,000 C we buy. Now here also 1,500 points away we have to sell, so that is just 20,000, right? 20,000, 21,000, 21,500, 1,000 point away. So this is only 1,000 point away. This is perfect. Now we can add this short iron condor. Prices are missing from one of the strike. Please check and try again. Okay, so that's not an issue. We'll just try again for January. We'll go ahead. We'll go ahead and check the option chain. We'll check the sensible option chain. Okay, sensible option chain. Here we can go ahead and check this out. Now there is some PE. So here you can see the options are maximum 20,500 people have bought. Okay, and then they have sold. Now this is of 11 Jan. What we'll do, we'll go ahead and check for end of January, 15 days later. 15 days later, here 15 days later, 21,000, 20,500 is the maximum sold puts. Okay, 20 people are not expecting the market to go below 20,500, so that is good. What we'll do, we'll also sell at 20,500, and we'll just we will have this peak, and we want it to, like, go a very soft angle afterwards. Okay, we want something like this to happen, a diagonal kind of spread. Let me just check if we have some other option over here. But there is no other option, so non-directional, this is the only option. Okay, let's just go with diagonal, and then I'll adjust this strategy. Diagonal spread, and then expiry of Jan Feb. Okay, diagonal spread, this is Jan. Okay, now the decay at the diagonal calendar, let's observe. So here you can see the strategy is completely reversed. Now what we'll have to basically do is plot the reverse. Let's check the non-directional again. Non-directional. Okay, diagonal spread, expiry of first expiry should be Feb, and then the next expiry should be Jan. Now it will come good. Okay, it can be okay. Why is the third expiry separate? And I think this needs to be Jan, this needs to be Jan. All are of Jan expiry. I think we can do these things ourselves. No need to do the strategy over here. Options. Let's just go ahead and check out the Jan expiry and Feb expiry, and then do this ourselves. So here is the let's start with 25th Jan. Here is 21,500, and we check the CE and PE. We'll just go directly and sell it on CE, and here is the here was a PE, and here is the CE. We just sell it off. Now you see that we have a peak profit, a max profit of 16%. Now what we need to do, we basically need to create some peaks at 2 sigma levels. Okay, at 2 sigma levels, 1 sigma level, we have to create some peak over here at these levels. So what is this level? It's 20,500. We have to somehow create a peak at this level. I just we'll just start creating the peak here, 20,500. Okay, if this is being sold here in the PE. Okay, now the 20,500, okay, here it is being sold, and now there is another thing that is 22,500. Okay, 22,500. Now that CE is being sold here. Okay, so you see how the strategy has become. Now what we need to, you need to pull this up. We need to pull this up, then we'll have to buy it. So yeah, what we do, we go ahead and buy it in Feb. So we go ahead and buy this in Feb. We go here. Now you see in Jan you sold at 12 rupees and then you bought it at 119 rupees. Now similarly in Feb for 20,500 PE, just go ahead and buy it. Okay. Here you could see we are selling this at 20 and buying here. It's okay. I'll just show you a duplicate strategy of this. In Jan 20,500. Okay, this is the PE that we have sold, and in February this year bought. Okay, that you have sold the 20,000. This is you bought, and then this is one what you have sold, and we add it. Here you see the peak. Okay, now I'll show you second thing. Jan 22,500. 22,500. Okay, we go ahead and with CE, and this is in Jan, so we'll sell it, and in Feb we'll go ahead and buy it. Okay, so here we go to Feb 29, we go ahead and buy it. Okay, here we buy. Now you see the strategy. These are the two peaks. Okay, this peak here is looking at higher, and then you're giving a 2,000 of loss. So what we'll do is basically, if we keeping the same lots, we can increase it, or we can just go ahead and in this Feb you increase the lot, we modify it and buy this further. Okay, you modify this and buy this further. You see how this strategy becomes, and in center giving a 6,000 loss. So it's 6,000 loss, but this at the ends these are higher. So what you can do is you can do the same thing over here. You go ahead and buy this one more lot. Okay, and then what you do, you just go ahead and buy this one more lot. So what happens, this is how the strategy looks like, and it's trying to reduce the profits in the center, but what we'll do, we'll increase this lot as well. We'll make this two lots, and let's see how this impacts, and we make this two lots as well. Okay, now you see how the strategy is impacting. This is like 10,000 here and around 4,000 here. I'll just duplicate one more time. I'll show you what was the base strategy looking like. So here is the options, and this is the Jan 2024, and here is we go to 21,500 CE and PE. We just go ahead and sell this CE, and we just go ahead and sell this PE. Now here you could see at a level of 20,500. Now you are looking at the loss of 13,000. You are looking at the loss of 4,000. Center of 17,000. Here looking, check out the losses. 20,500 was 17,000 loss, 18,000 loss. That is huge loss. Sorry, this video is getting longer and longer. So that's how the thing is. Now we have reduced the peak. What we have done is basically increase the range. So either here the break even was 21,000. Here your break even is 21,081. That was 21,030. The max loss is something that I need to worry about. Okay, 21,030, 21,081. What we can do, we can increase the peak further. Okay, we can just go ahead and make it 10 lots. For all that I know, I can do it 10 lots. Okay. Now we cannot go with 10 lots basically, because this will not go to 10 lots. 6 lots is something what we can go. With the current margins that we have, we can go with 6 lots. Okay, let's check out how the 6 lot strategy looks like. And the buying of this 6 lots of bot and 6 lots here. Now what you can see is the current perfect peak. Okay, now there are two peaks here. what we are getting around max profit of 10,000. What you need not worry about. Estimated margin is 4 lakhs, and for 4 lakhs, suppose you're getting like 4,000, 5,000 of profit. I think that is also a decent profit. You should not much should not be worrying about it much. And see how this peak is going upwards. See how the market travels. 5 days later, this is how it looks like. Okay, so for this time now, the Jan options will decay very fast, very fast. And I think this is good way, good strategy for me. Okay, just reduce this on one lot, modify, and reduce this to a one lot, modify. This is decent in itself. Okay, what we can do is we need not go to like six lots or so. Then probably go to 4 lots. Okay, we can go 4 lots on this. Okay, here we can again go 4 lots. Okay, and here we can again go 4 lots. So in this 4 lots you have some decent amount, 12,000, something like this. Okay, and by 22,500 we have some good amount. Now anything, any kind of problem happens, what you can do is just go ahead and buy this CE of February and then figure out some kind of adjustments later. Na? That won't be much of a challenge. So let's go ahead and deploy this and then see how things turn out. For now, this is the option chain and this is where the market is. It's not moving much. Let's go ahead and put out all our options on the plate and then decide 21,000, 20,500 piece PE of February. Okay, 20,500 PE of Jan. So here is the Jan PE. Okay, these are the two P's now. 21,500 PE of Jan, 500 CE of Jan. PC 21,500. Now we go to 22,500 CE of Jan, and we go 22,500 CE of Feb. I think all our options are on the plate now. This is a 6 leg strategy. So what we do, we just go ahead and start buying the options and then start selling the options. Okay, so we are trying to buy this. Now again we are starting with 4 lots as discussed. 4 lots will start and then decide forward. So this is 200. Currently we can get it at 82. Buy. We can again buy this at 4 lots. Buy this at 20. Okay, two options are on the buying track. Okay, we have put the Jan option on buying. Let's just cancel this strategy. Cancel. Yes. We have to put a Feb option on buying. Let's look if we have taken the Feb option here. So it's 22,500 Jan C and Feb C. Let's put this down. Feb. Okay. This is what C is we had to buy. Now this is also what we have to buy. Let's check out the buying rate. 117. 117. Let's just go put it for buying. So Feb and Jan we have put for buying. Now what we have to do is basically sell a straddle right away. So this is like selling a straddle of one lot, single lot straddle, and we can sell this at 270. 277. We can sell this. Okay, and PE we can again sell it at 194. We can sell it 194, 195. We can sell this. Now we have to go for 4 lots of selling this. 200, 4 lots, 13. You can sell this. Okay, and 22,500 CE and 20,500 PE of Jan. Again, 4 lots of this. And 21, 200 and 21. Sell it. Okay. So all the strategies are put out over here. Now something that is executed is this sell amount. Okay. Now we have to ensure that the other sell amount is also executed. Let's just wait and watch. Okay. Some things are executed. Let's modify this 20.7 and let's check. This is executed. Now this buy is left. Let's buy at 83, 83 and modify. And this buy will get executed. 83.3. I think this should get executed now. Yes. Now this sell is pending. You can go at 12.9 and this is modified. And this sell is again pending. So you can go at 2275.6555. I think this should get executed. Yes, everything is executed. Now let's check out the strategies. Okay, those the two sold options, they are at 275 and 195. So let's come back to our strategy, main strategy. Let's close the pseudo strategies. Okay, 275C, 195P. Okay, this is like quite decent on the same levels. Obstra sometimes hangs up. Let's check the VIX. India VIX is 13.47. So let's just save the strategy with 13.47. 7 VIX, and the strategy name would be like calendar crown. Okay, this is like crown strategy. Is to real portfolio. Let's come to the portfolio and let's check out the crown strategy. I think we can let this Batman go. Batman profit has come to same level. Unfortunately, we'll have to just let it go. Analyze this trade. Okay, now this is highly VIX dependent trade. That's why we are noting it down. Now 4 lots of bought PE at 83, and that is fine. 4 lots of bought CE at 117. I think we can modify this to 117. Okay, and then 4 lots of sold CE is at 13 and PE of sold is 21. 13, 21, 21. Let's do it 21. Let's see, E is at 13 and that is fine. I think we can save this strategy. Now what we can see is if the market goes to lower end here, it will start showing some kind of losses. So what we can do is probably increase a little bit of risk at 20,500 and make the strategy a little bit of crooked. So let's check out the margins first. It's a 8 lakhs of margin, and I don't think the markets are going down that much. Okay, I can buy the items later. Na? Okay, 20,500 PE. What I can do is basically just add the selling part. I'm not getting a good price in this sell item. Okay, what I can do is wait. Probably this is 6% of max profit, and I think if I get like 3-4 thousand in like how many days? 3 days and 4 days of time, 5 days of time. I'm getting like 4-5 thousand. I think I can exit this strategy completely. Okay, and the margins now left over are the 8 lakhs. 20,500 is something I can increase my risk on. 20,500 PE. Okay, so that is the downward. That is downward over here. So what we can do is basically just go ahead and sell some 20,500 PE, or we can do some put collar as well here 20,500. In the current this thing. So here there is some peak. Okay, at 20,500, and how to increase that peak is the question. Now our new strategy is basically 20,000 22,500. So that is around here, somewhere around here, and 20,500, that is somewhere around here. Okay, so this is the these are the new break evens. Given the market is currently in the downward trend, I should not ideally increase the risk at the bottom end. But we cannot say anything and we cannot predict anything but what will happen. But in terms of a day trend is going downwards. It's moving downwards, then it's not benefiting me from the upper end. Basically, what we can do is increase the risk at the upper end, not at the lower end. So here, what we can do is just sold. We can add 300 quantity and then get that with it. 300 at 12.8 is sold. 75. Let's check this out. Okay, it is executed. 12.84 500 quantity at CE. 10 lots. 12.84 modify. This is the strategy what we are looking at now at 13.5 wicks. Okay, we can save this strategy. 13.5. Let's make it 13.5 only. Now what we can see is that the lower end is quite protected. In my upper end, how it is moving after 5 days, upper end is also moving at a decent pace after protecting my lower end. Okay, if the market moves up, the wicks will stay stable and my lower end are also protected even if the market goes at the lower end. Okay, I suppose after 6 days, if the market is moving downward, I still have some 5,000 6,000 of profit, and I think that's fine. Okay, cool, eh? And we have saved the study. So that's it for today, guys. Let's observe later. So today is 11th of January, Thursday, and we are at 11:50 a.m. And looking at the market, it seems quite a bit in the consolidation mode itself. So in the pre-market, there was some buyers who had took the value still 21,800, but I still see that it has then came down. Although the India VIX is also positive, the US markets are positive, and the Nifty is going with a slightly upward bias. Now, because it is going with the upward bias, I think we can increase the risk on the negative side, the put side basically. So here it is 10, and we can add more lots to it. So that is 300, and let's see if this can get executed at market. Yes, it will get executed. So at 10.8, we'll just start selling, and we will see if we can get. We are at third one. So 20,500 PE. 20,500 PE. Basically, we have to check. It's going at 10.7, so that's the going rate. We'll go at 10.7 and we'll just modify this. That's done. Now let's look at the strategy. It's looking like 14.76 at P. 14.76 P sold. This is 15. Modify. Let's see the strategy. Now let's check out the weeks. Weeks is like 13. I think our weeks is effectively 13. Okay. Now if the VIX rises, positional IV, VIX rises, what will happen? Actually, our profits will increase. Okay. So that is a very good aspect. Because VIX rising, the profits are increasing, and if you check Greeks, then it is theta negative. So it is theta negative and Vega positive. But that is the kind of strategy we need. So it will support the volatility if the market goes down, but at the same time, if the market is too violent, it increases, it will strategy will give positive returns, and there is a good amount of theta. So if the market doesn't make much movement, the theta will also decay, and we will get around like 10,000 or so, and that is fine. That amount is fine if we get around 10,000 out of it. Okay, and so that's it for today's adjustments. I don't think we need any more adjustments for now, because we have decided a break-even points of like 22,500 and 20,500. So that is what we are currently banking on. We currently banking on this strategy. On a daily chart, let's just take a look. So the daily chart RSI is in a downtrend, but the downtrend is not that sharp. So the uptrend here was sharp, but this downtrend is like quite weak. The uptrend actually started since the October 26th, and then it took like till December, so almost like November, December. So in 1 month, the uptrend happened, and we are in then whole of December. It was trading in the upper half only, and now in the January it's starting to go down. So if it's looking like it will go down till March. Okay, so and slowly, I think this is still a consolidation phase, and we will be safe, hopefully. And so there will be lots of learning for you guys. The trick here is not to make losses. That's what we will do. You have to earn 20,000 in a month, and for a recovery, maybe some little more. Okay, so that's it for this video. Thank you. Bye.
I think at the lower end, February PE is going to benefit us anyhow. I think we can just go ahead and exit this. So 100 lots we can exit this, and we can go ahead and check this. I think we can exit this completely, and it's not benefiting us in any way. So 200, 20,500 February is exited. It's not going to benefit us anyway, right? Completely exit this. Completely exit this at 60. Let's check out if the margins support us. Yes, the margins support us. So we can completely exit this. Okay, 45, 59.5, and I think this will get triggered. Okay, margins are 31,000. This is completely exited, and we can go here and take this out. February PE, it's not benefiting us in any way. Now you can see, and we save the strategy. Now you see the positive end, we have some good better scope, and on the negative end we have nothing. And now in case the market troubles at negative end, we will go ahead and buy something, but I don't think after 2 sigma levels we need anything like that. Let's just wait. Thank you.
Come back. So here we can see 11th of January, and on 11th of January the market has suddenly slipped downwards. So on the slipstream, what we can see is our lower break even is around 21,100 200 levels. Okay, that is our lower break even, and upper break even is quite far away. What we have done is probably expired our margins. Basically, we have used up our margins, and the market is not going to reach 20,500. That is definitely for sure. So 20,500 PE is safe, I believe. PE is safe. Let's look at the expiry. It's on 25th of Jan expiry. PE looks safe, but at the same time, we will not have any profits left if the market falls below this 21,200 levels. So what we want is basically to market go upwards, and because the international market is having quite a positive bias, I don't think we should be facing any problems. Let's look at the Greeks. See again now which is Vega negative and futures chart and it's Vega negative. So what we can do basically, we can go ahead and start buying PE, December PE of 21,000, February PE. So let's just check options of 21,000 and the PE. If we go ahead and buy this, what will be the impact? Here you can see the impact is straight away, it will go upwards. Okay, but that we will buy only if we reach this peak. Okay, now if we add this one and we add another lot, see this directly in two lots, this will directly go upwards. Okay, and it will be the same position as it was earlier. What we want is right now basically just to buy one PE and leave it for safety purpose. So it was 83, it was a 16 160, and today's decay, what was the decay, what we had the February PE. Okay, PE was already it's now 65. Okay, so we this was already like 16 to the 120 130. This was we had bought this at 130. So basically here we should hold our grounds, okay, hold our grounds and not buy any random stuff and just wait. Wait for the markets to turn upwards. So that's what we can do. So this is our bottom line. If the market goes beyond this, we'll start incurring some losses. I'm not expecting the market to fall. So and today is Thursday, so this may be like a Thursday kind of an expiry thing. So for verifying this, we'll just go to Sensible. Okay, we'll check the Sensible options trading. We'll just check option chain of Sensible. Here you can see 11th Jan. Okay, CEP is quite here, and the puts you can see 21,600 is a quite strong put selling, and 21,500 also strong put selling. So these two puts are there, and 21,650 and 700 are strong calls. So market is not going up today. Today the market is not going up. Okay, and what you can do is also check the 18th Jan expiry. 18 Jan expiry we see 21,400 very strong, 21,000 PE is also very strong, but 21,700 CE is extremely strong. If we go ahead and check for 25th of Jan, yes, 25th of Jan, we can see the 21,500 PE is strong and 22,000 is strong. So we'll just we'll wait and observe how the market turns out.
So let's look at the market today. So today is 12th of Jan, Friday, 10:22 a.m. We see the market open gap up slightly because yesterday US markets were positive, and day before yesterday, I'm sorry, and then yesterday it was slightly positive. S&P was slightly negative. So I think our market VIX is India VIX is falling quite a bit. Now what we can do is basically we can we can increase the risk from the lower end, and we can come down at 20,700. 20,700 PE is the lower end. That's what I think. So for January, and 20,700 PE of Jan. So this is the 20,700 PE of Jan. And this we can exit completely at 7.9 and buy this off. So if it gets executed at 7.9, we'll go ahead and sell it at 10.65. So currently it is at 8. I'll just show you the back office. Okay, reports, PNL report, and if we go for January 2024, and if we see the FNO, then we'll understand that we have only incurred 2000 profit in this month. So that's a very lower amount of profit for this month, and that is why we need to take some risk and gain some extra profits. So that is what our target would be here. Now I'm checking the orders. Yes, it is executed. What we'll do is just straight away go and sell 500 lots at 10.5, and that is also completed. Now we'll check the margins as very less. The market reverses, we will be in a soup. Otherwise sorted, but it doesn't look like market is going to reverse from here very soon, but still we are away. So this has been sold, and we save this strategy. VIX, effective VIX has actually come down now. It is like 12.8 something. So that's the effective VIX. Now let's check the Greek. Now it is Vega negative. If VIX increases, we will be in a soup. Okay, and at the lower end, if the market falls down, the VIX will increase. For now, it seems that there's this stable end profit at 22,000 is around 22,000 itself. So we'll have to wait and watch for now. So that's it for adjustment at this moment. The market seems positive only, just looking strong. And if it goes up, I don't think I have anything to do. So that's it for this video. Thank you.
January Friday, we are at 3:25 p.m. And you can see The market is just going upward. It's reached 21,900, and the US markets were also quite up, and our markets are also decent. Now let's look at the daily chart. Okay, this is the daily chart, and as you can see, the RSI is trying to cross this control line. Okay, and you can see how big this candle is, the green candle. So all this indicates that we can just go ahead and sell another lot of PE. We just went ahead and sold it, and here is the 21,000 PE sold. So it is 19.3. Currently there is not much juice left in the PEs, so it's 19,000, and PE here is the 19,000 is 21,000. So one point we were at 19,000 levels, now we are scaling 21,000 levels, and you can see the India VIX has now gone again to 13, but now we just sold one lot, so our effective VIX is not that great. Let's check out the margins. Margins are 6,800 something, so that's fine. Now if the market goes up further, I think we will see some red area over here, but at the same time we are still safe until 22,600, and that is the kind of levels that we are holding here, 22,500 odds levels. Okay, so that's it for now, and let's see you again on Monday. Let's see what changes come on Monday. Based on that, we'll decide the path forward. Thank you guys, bye.
Welcome back. So today is 15th of January and this is Monday, and in the mid month we see the market has moved quite positively. Let's look at the daily chart. Here is the 1 day chart. Again another gap up. So this is like very risky situation. When it will fall, it will be a very drastic fall. For now it will gap up and probably it looks like it's going up. So our upper break even is in threat. What we'll do, we'll go ahead and actually check the margins first. Margins are 41,000. What we can do is increase the buying of CE over here. So whatever CE we have bought, we'll just increase the buying, or what we can do is book the 16,000 loss over here, because anyways our profit will be 35,000. So this loss will book it. Okay, this is 608 and we can exit this at a loss. Okay, so this is exited. Now margins are 57,000 and our loss is booked. Let's just go ahead and check the CE. Here is the CE that we had sold and we have exited this leg. Okay, now you see there is a very good profit at upper end, and the break even is also increased. Now what we can do, we can actually start increasing the risk from the lower end and we can bring it to 20,000, 21,000, because our market has decisively broken the 22,000 range. So we'll go ahead and bring this to 21,000. So we'll here is a 21,000 PE, and 21,000 PE we had sold one lot over here. So we'll just go ahead and exit this 20,700 PE, and here is the exit, and we'll exit at 7.5. 7.56 is fine. Let's just check if it is getting exited at 7.6. It is not getting exited. 7. Okay, it is going to 8. So let's go ahead till 7.8. Modify. So it's not getting exited even at 7.8. We'll modify it again and let's try this time 7.9. Not sure what is the issue. The issue over here is that the market is going up and yet the put price is not coming down, because the India VIX is going up. Nevertheless, we'll still have to book this. We'll modify it at 8.
We have sold this C and we bought this C. Let's check out in next 4 days how the market reacts. The market will react very good if this is going like above 200 or so. Still be profitable. So this month I don't think it will be as great as the previous. So our market, we are not getting the exit even at 8, so we'll just move it to 8.2. Let's check the market depth. Okay, here. Okay, 8.3 will get an exit. I think we should get an exit over here. So yes, it is exited. Now we'll sell 500 quantity at 14.5. Margin is insufficient. We'll set 400 quantity. Yes. 14.5, it's not getting executed. We'll go with 14.45, and that is fine with us. Let's check out the margin. Margin is still left, so I think we can go ahead. Okay, with one more lot, add it. T quantity selling 4.14.5. I think this should get triggered. 500 lots at 15. We'll just go here. PE, which is 10 lots basically, and the effective market has come down to 15, and our VIX is fine. VIX is not going up to 13, and that is great. So PE is exited. Okay, so here is a new item. 21,500 PE is still out there. I think now the PEs are coming down, so 14.2. I think this should give us the order. Yes, you only 3 legs. Okay, 22,500 legs. Okay, 22,500 and 21,500 PE. I think we have exited, and 21,500 PE something that we exited. Okay, I'm not sure really why did we do that, but we had exited that. So this is how our strategy is looking like at present moment. So we have a very little loss at the lower end, and we'll get a decent profit if our market closes at 22,500. But after that, we will get a very sharp decline after 22,500. Now, before adjusting further, let's just look at the market. Here we can see there is a very strong positive bias, and I think we can adjust further and go ahead and buy this for around 100 quantity, that is 2 lots at 285. What will do, 280. We'll put the order at 280, and we'll track. Jan, PE, Jan we can remove it. CE, PE of Feb also we can remove it. Okay, this is the going at 283. Now we can go ahead at 280.6. 283. Let's see. We wait for 283. Check out the lines. Yes, this is executed. So it is 172, 300 quantity. Here, if we come over here, 6 lots. Suddenly this has become 172. Modify. Here's the strategy. Our VIX is quite higher now. Okay. Now what we have to do, we don't have to worry much about the lower side. Okay.
Yeah, we haven't taken much of a risk. What are the margins? 36,000. So this is fine. So we have adjusted the strategy for the bullish angle, and our upper break even has gone to 22,771. So that is great. And the peak is around 83. We'll let you know about further adjustments in future. Hello guys, welcome back. So this is 15th of January, Monday, and as you can see, there was a slight gap of opening, then it started going down, trying to fill the gap, but still the gap remains, and the market has come up and stabilized. Okay, here if we go ahead and check this data and we check the activity. Sorry for the background noise. We'll just check out the FIDI data and activity. Here, as you can see, the FIDI had the net buy figure of index options. Here, there is a buy. 11th of Jan. Here, you can see index options. There is a sell figure. You can see 10th of Jan. There is again FI sell figure. Now, this data is fine. We'll have to check the NSC data, NSC FIDI data. FIDI data. If you check over here, trading activity of 12th of Jan, that is Friday. Here you can see that the DIs are on the buying spree. FI had sold a little bit. Now here we cannot just go ahead and change the date. I think if we could change the date, it would be great right away. And let's just check this link. Okay, there is nothing over here. So here we could see that a strong buying from the DI. Now here we had adjusted in the morning and we booked some 16,000 loss, but unfortunately the market did not give a follow up in our direction. What we can do is basically we can add the risk. I'm saying that we have 36,000 margin. What we do if we go ahead and add the risk and we see the margin is shortfall and the margin is insufficient. So I think this recording can go to hell. Here, okay, here we can see if we can add this quantity, okay, at 49, we can add it at 50. We'll just put what we'll do, just add one lot at 50. We'll sell this and let's check the margin is 6,000 remaining. If it goes up, it will still be profitable. If it goes down, and then we'll start incurring several losses. But yes, this sold option actually will help out. So let's just wait and watch. If the market order gets executed, it will get executed. If it doesn't get executed, it doesn't get executed. So that's it. We just leave it here. Okay. Thank you. Okay. And because of the downfall, we'll probably have to exit this thing. Okay, we'll have to exit this at 182. Sell it. The margins are not sufficient. Okay, that's why it is getting rejected. So what we'll have to do, we'll have to reduce the PE or probably CE, something we'll have to reduce. So we can exit this for 300 lots, 300 at 17, and let's see if it's getting buy, it bought. Now I will just show you that when the market opened, we opened a gap down. The market went up, but it's still looking like a weak. It's very, very weak, and I think this bot CE will hurt us. Yeah, I'm trying to exit this CE. Let's check out the India VIX. India VIX is 13.8, and that is the only reason why this CE has not gone down so much, but still coming down, and it will hit us very heavily. The strategy has basically failed us. Okay, not sustainable. As you can see, this is going down, and if the market goes down, this is not sustainable. So we have to exit the CE. Now for exiting a CE, we need to reduce 300 lots from here, and that's what exactly what I'm not getting to do. What we'll do, we'll modify this and make it 18, and let's just check this out and again check the positions. Okay, I'm still not able to exit this. Let's just check out again. See, let's check the 5 minutes chart and see how the market is reacting. And we want the market to go up along with India VIX, but that's not exactly what's happening. Okay, so orders are executed. Yes, we have reduced. We got some margin free, and we can check if this is getting exited. Again, exit at 177. Sell. Yes, the market is open, and we could
put the order 177, and we'll go for 176, and we'll exit this, and we can go for even 175. And okay, markets are coming in hot. We have exited at 1000. Now there is one problem, as I'll show you the back end. The P&L report for January here, I don't think we're going to be closing very good in Jan. It's looking like a bad month for us. FNO, we had booked the loss, and that's why the current loss is 3,916. That is around 4,000 is the loss. And our unrealized P&L until yesterday was 16,000, and we completely lost 16,000 over here. So that is a huge loss. Somehow, if we close in no profit, no loss, at least we can redeem ourselves. Now let's check adjust the strategy and delete this CE of February. Here this is gone. Okay, what we're left with is this triangle. Now the margins pending over here are 2 lakhs. Okay, for 2 lakhs of margin, what we can do is probably we can do 22,500 CE. We can add this up. Okay, now what we can do, we can add up 22,000 CE, and what we can do is we can exit this 21,000 PE, because I see that the market will come down to 21,000. But I guess I think I can add to 22,000. We can add here, and let's see if we can add 150 lots. It would be great. And market limit and sell. Okay, modify it, sell it for 17, and yes, the market order is executed. Let's look at the margin, that is 41,000. The 100 lots here, 21,000 PE is extra, and that is a problem. It is problematic. Here we have 8 lots only, and we modify the strategy. Okay, we can save the strategy, and the VIX can be effectively 13.5. Close it, and we can see that we have a 13,000 positive. The Greek says theta is 8,000, but the market is going to move very violently over here. Okay, for now I'm not exiting the 2 lots of extra sell from the lower end, because the market is still going down, and I don't know if my 21,000 will be threatened. So currently it is, the market is here. My upper break even is 22,500, and I think and I believe that I can come down further. And I check the margins are not that great. That is the problem. But I see I can book a loss at 21,000 PE. I think I should book a loss, or probably go ahead and do buying at 21,500. As I see, if this goes down, then this will go down till 21,500. Okay, and I have some things left. Let's see, 21,500. What is the 21,500? And that is the PE of January. Here, if I check out the PE of January, here it is the PE of January. We clear it out, and this is at 82 rupees. 82 is damn expensive, damn expensive. Here, if I go for option 21,500, okay, I check out the fee. I go ahead and put a buy order, and let me just look at the market movement over here. The market is not traversing down very fast. Okay, it's not that fast. Okay, this was a bad reaction. Then the market stabilized, and I think it will be flat. No, the future adjustments we can only do based on the market movement. Okay, so let the market react, then we can decide what to do. Otherwise, it's going to be a problem. Or what we can do is, if we are too chicken over here, we can actually book the loss and we close at 0 for January. So that is also another option. So that's what I tell you. When you trade in options, you have plenty of options. When you trade in futures, you have no future. So based on plenty of options, what we can do as of now is probably wait and check out how the things are panning out. What I see here, we are quite closer to the lower end. Okay, and when the market falls, it falls very fast. But now when it will rise very very slow. So what we should do ideally is get away from this 21,000 PE, or we should start buying internally. And will that internal buying help? That's the another question. What if I add this and make it two lots? I think I should do this. I think it will come below 21,000, and 5,000 is something that is decent. I'll go ahead and buy this. These are 100 and I go ahead and buy it 83.85. It is market complete, and the options here is the 83.6, and let's go ahead 83.6, two lots, modify. Yes, now our lower break even is around 20,862. While keeping the upper break even constant, we save this strategy and let's wait and watch. So that's the deal. Wait and watch. Now, thank you everyone. Bye. Hello guys, welcome back. So today is basically 18th of January, and we can see there is some sanity return in the market, and the market is now going downwards. It's on a downward trajectory. Now here what we can see is that we have reduced our lower break even. We have brought it down to like 20,800 levels, and today the market went up, but at the same time I still feel there is a weakness in the market, but it's still going up today. I'll just show what adjustments I made. I basically bought this PE in fear of market going down, but now the market has started going upwards again. So what I can do is basically increase the risk at the PE again, and then I can sell this off. Okay, so my sell order is executed and margin left is 1.5 lakhs, and this is 3 lots, and this is 11 lots, and 11 lots is basically at 17 rupees. So this is 11 lots, and this is 17 rupees, and I modify. Here you can see I save the strategy, and I can increase the effective wicks because my effective wicks have actually turned 14.5. So yes, we are going on a very high wicks zone, and due to which the theta effect will only come very late. Now after one day we are still positive on the downside we are still positive, and that's fine because our lower break even is quite close, that is 20,800. That is good. Now now actually, if the market closes it's around something around below 21,500, that is in our favor. It closes above 21,500, it is not in our favor, and we will lose like 5-10,000 rupees this month. So let's wait and watch how these things turn out. Hello everyone, and we are back. Today is 19th of January, Friday, 9:16 a.m. The markets are positive. US markets are positive, so I think we will close in green. The action step that we need to take is basically book losses. Okay, so that's all what we can do for now. We have to book the buy side losses. Here we have to exit this exit one lot of exit this PE 50 quantity at 15. Okay, and what we have to do is basically book loss on the buy side and exit this 50 quantity of 93.5, and let's book it. Okay, one thing is booked and the other thing we'll just get it booked. Here we can just modify and try to book it at 15.5. Sorry for the disturbance. So both the orders are executed. Sorry for the voice disturbance. But yeah, now what we can see is this is the strategy 149 and 17. It's just we reduce this one lot from here, and what we did is reduce this one lot from here. Okay, now here we can see that PNL will be positive when we close this market, and the candle still looking very very strong. Okay, this is the first 5 minutes candle. It's looking strong. I think this much is sufficient, and what we can do is probably go ahead and sell at 21,500 probably, but no, let's wait and observe. We have the margins left. We'll observe it for one more day, the weekend, and for observing on the weekend, I think if we want something we can do is go ahead and sell the 20,800 PE of 25th Jan, and we clear this. We sell it off for 100 lot, and if I sell it, the order is getting rejected. But if I sell it, okay, 9.95 is what we got for 20,800 P. The margins are good, decent. Okay, we can also start selling CE. Okay, this CE is of 5 rupees. Now what we can do is we can start selling this CE, or we can probably wait. We can wait. Options 20,800. Your PE. Here we sell it off and we add the position. We save the strategy. The effective VIX is India VIX is 13.8 only. So let's just keep it there. The VIX has come down actually today, so the profits are looking decent. Now I can hold this strategy for some time and let's see if the market reverses. And if the market reverses, it would be good. Otherwise, the decay on this 21,500 PE will actually give us a huge loss. So as of today, see this red candle. Now this makes me afraid, and then this can easily come down to like 21,200 levels, and this PE will give me profit. You know, here if you see, immediately as soon as we reach like 21,300 levels, and so we get decent profits. Guys, welcome back. So today is a special session in January, and this is Saturday, and this is the first time we are recording on a Saturday, and this is the first time that the market is working on a Saturday. Now let's take a look at our position. So this is our current position. Okay. Now what I've done is I've added 21,200 PE over here. Basically, I want to exit this and add. So I'll just exit this at 50. Okay. 9.8. Just go ahead and buy it. Okay. Buy it at 9.85. Not a problem. And let's check the margins. And then let's go back to the positions. It is going to 9.95. So PE is in danger. Here the markets are quite stable on a Saturday, and the market looks positive everywhere and looks quite stable. I think this one lot will get exited, and this is 16. Okay, so earlier I had this PE of 10 lots. Make it 9. Yes, modify. Yes, now it is exited, and we'll go ahead and sell this 21,200 PE at 19.05. Not getting executed. Let's do it at 19. Okay, it's got executed. Let's come back to the positions and adjust it 19. Let's take it at 19. Modify. Yes, so this is our adjustment, and the VIX is not moved much. So here are our cards, and the margins left is 28,000. The positions are, as you can see, so 8 lots at 16 rupees. 22,500 CE is sold at 19 rupees. So CE is sold at 19 rupees. Okay, you can modify this. We have the CE. Then 21,000 PE is sold at 16 rupees, and 21,500 PE is bought at 149 rupees, and but I am seeing the buy price of 182, and this can go to 182. Modify. Now as you can see that our overall P&L, the market will close in negative only. Okay, we won't get a positive return out of it. But I'm really afraid of the market going haywire and going too much in the positive direction, and that is the reason why I'm not making any more adjustments. Even if it closed at negative 1,000, we'll have to just live with it. And I'm really afraid of this PE side. Anytime the market can go down, because we are actually moving to a disaster line, and see how the disaster management performs. That means we are expecting some disaster, maybe, and we might expect some negative news. So I'm not really sure what will happen next week. Next week is a truncated week, and Monday when we wake up, the market can go just in any direction. I'm not really sure what will happen. Now, if it goes down, we'll be in a good position. But if it goes up, I don't think it can go beyond 22,500, and that is why that's my upper limit. But we'll not incur much of a profit over here. So we are currently utilizing the estimated margin of 8.94 lakhs, although our margins were higher. But somehow the consumption at this broker terminal is slightly higher. The margin consumption, the margin block is higher for this broker. So that's it for now. So these are about the adjustments for today. In case I make any other adjustments, I'll let you know. Thank you so much. Bye bye. Today is 23rd of January, Tuesday, 9:20 a.m. And we could see that the Saturday session was quite flattish, and after that, Monday was a holiday. So today is directly Tuesday. You can see that the India VIX has fallen down a little bit, and the market, I think it will be flattish only. What what is the problem? Our margins are a problem. So 20, so let's see what is here. So there is some 20,800 etc. level. So let's check out the PE. So here we have tried to buy 21,500 PE, and it's not benefiting us. 20,800 PE something that we can exit completely. So we have a 560 profit here. So we can go ahead and exit this at 2.2 rupees. We buy it. Yes, and then our margins are available for 21,200 PE. We'll just go ahead and sell this. Okay. So our margin is this now 21,200 PE at 12.95. We'll just put it 12 only and let's modify. So here it is. Now here you can see at the lower end we can try to increase the risk because we have already bought 21,500 PE. Okay, so what we can do is probably we can exit this completely, or maybe we can exit this like something like make it 300 lots. We can exit this at 150 at 3.8, and let's see 3.85. Okay, this is exited and the margins are decent. Now what we can do is probably we can add this and go ahead for 200 lots. 7.15, and margin is insufficient. What we'll do is go with 100 lots and sell. On the CE side, 22,500 is never reachable, so that is going to decay completely. Here I go just check the orders and modify. Put it 7 and let's see. It's not even getting triggered at 7. Okay, it got triggered. Let's check the margin, like 1 lakh margin left. Now this is 9.97. You can do is increase it 100 and let's see. No, it's insufficient. The margins are insufficient. So 21,500 PE we have bought. 21,000 what we have sold PE. These are only 300, that is 6 lots. Okay, and currently the level is at 17. Modify this, and here it is at 10. 4 lots. We can modify this. So this is how it looks like. On the CE side, we have completely gone away on the CE.
there isn't much adjustment left, and it is 23 Jan. Expiry is 2 days hence, that is 24th and 25th. So for 25th Jan expiry in 2 days, I think the market may or may not reach 22,000. 22,000 is not such a strong resistance or support either. What I can do is probably I can cut my losses, because I don't think even at the lower end the market is going to go anywhere. If we can do is completely move to 21,200 PE and 22,200 CE. Let's check what is the going rate for the same. Okay, so that is the 5 rupee option. What we can do is come ahead. 1.7, you can completely exit this. You can buy this at 1.7, and let's observe. By the time we can also look at the backend and check the reports, and the PNL report we can check. Here we can directly go to 21, 20, 24, and we can go to Jan, the first month of 2024, and we can go to FNO, and we can check the levels, what's going on over here. Yes, there is some order that has got triggered. Okay, we could see that we have attained negative 3,700. So that is not a profitable thing. Now let's go ahead and sell this. We'll go ahead and sell this 400 lots, and this is 5.35 levels. Okay, yes, this is executed. These are the margins. What we can do is probably go ahead and exit this 21,500 PE. We can exit this bot quantity, and I think we should be exiting it. I'm sorry, I'm adding it. I should just go ahead and exit this, and this is sell. Okay, this is rejected. So I think we should exit this 3.85 item. Okay, 3.85. Okay, we are able to exit this 3.85 item. Now we can exit this bot item. Okay, this is exited. Now let's just check the margins. So we can exit this completely. I'm not sure why I did not exit this completely. Yes, it is exited. Now what we can do, we can go ahead and add the 200 lots over here. 7.45. These are complete. Now let's check the margin. Yes, this is perfect. Okay, 22,200 CE, 21,200 PE. This is the perfect balance that I'm looking at, and 8 and 5. Okay, this becomes 22,200 CE. Okay, this is fine, and 21,200 PE. That is also 8 lots. Just make it 8. Modify again. We can delete this, and we can delete this. What is our effective VIX? Let's just check. It is 13.4. Okay, our effective VIX will come down to 13.5 somewhere. So this is the center. Now the max PNL that we can achieve from here is 0.54% or 5,000 rupees. So let's just wait and watch how the market travels, and then we can decide what to do with it. Okay. So if we see even in one day, 21,500 and 22,000 will be still safe. So that's it for today's adjustments. Let's wait and watch. Thank you. Strategy over here. So this is again 23rd of Jan, Tuesday, and due to an unfortunate turn of events, the market started crashing down, and this crash down actually impacted us, where we had to actually shift our strategy and do one buying order, okay, for 200 quantity, due to which our range of profitability has reduced to only this small range. Okay, 21,000, right, around 21,200, very small range. So this is a very unfortunate scenario which has turned out. So ideally the market should have reversed from here, and this did not happen, and the market started cracking down with the rise in India VIX.
And the given 7% rise in India VIX actually shows that how drastic the fall was. So redemption from here is extremely difficult, and even managing anything from here. What we can do is probably we have already bought this, and now what we have already sold here is 22,200 CE, and we can do is increase the risk at the upper end only and nothing else. So this can go 100 lots. Okay, but the margin is insufficient, so we cannot do this. What we'll have to do, we'll just have to wait and watch, and we'll have to take this max loss whatever is mentioned over here, that is the 13,000, in case the market not does not move beyond this 21,200 levels. So this is a very unfortunate scenario. What we can also do is probably cut our losses, but what I see is theta will decay very strongly, and you can do is keep observing the market. Okay, keep observing the market over here. If there is a sharp recovery from this end, then it will be great. Here we could see a sharp recovery from this levels. Okay, and what if there is a sharp recovery from these levels, then we have to observe and take a call accordingly. So for now I will observe this, and according to my observation the market is going up. Okay, so I'll do is exit this PE, bought PE. Okay, I'll take the 4,000 rupees loss. Okay, and if I need it again, I'll exit this. If I need it again, I'll buy this. Okay, for now I'll exit the 150 and I'll take the loss. Okay, so margins are here, positions are here, and let's see 98. So here if we can see the strategy, here it is the 98. Sorry, I'll have to edit this very hard, and I save this strategy. Okay, so the market goes up, I'll just book the loss today and leave this because we have already done a very drastic adjustments. That's it for now. Thank you. 23rd of January. So this is again forming a source hammer. What we can do here is probably exit this strategy and start buying options. You can exit this completely. Okay, so we have exited it, and we'll go ahead and buy the options and then decide how the market is moving, and based on that take some decisions. So for now huge range, there's a huge range over here. Okay, and what I think we can buy 21,100 options over here. So I'm just going and buying 21,100 options over here. This is 200, and I just go ahead and buy it. Now let's see how the market moves, and how this option reacts of 21,100. And I'm going to see some positive action in this option, and market is gonna come down drastically from what I see and from the what this candle depicts. Okay, and we'll do the option buying adjustments from here. Okay. If the market is moving upwards, then this 21,600 option will also give us very good return. If you go 21,600 option in CE, and you go ahead and check this, and if this is 55. Okay, now despite market moving downward, this option is not moving as much as required. Although this should moves, and it is moving at this supporter, so we'll just wait and watch, and whatever is update I'll update at EOD. Hello everyone, welcome back. So this is again 23 January. Okay, we are at 1:22 p.m. After the market fell down so much, what we saw that we had to book a loss, and afterwards when we booked the loss of around 25,000, we came here to put a new strategy, and the new strategy looks something like this. Here we have gone ahead and bought the 21,100 PE and bought the 21,600 CE. So if the market goes beyond these two line items, we'll incur some certain kind of profits. And then we have gone ahead and sold 10 lots of 20,600 and 20,000, 22,000. legs, and so this is a new strategy. And for this, the effective India VIX is the same, 14.84. Okay, 28. The same strategy, 0.8. Now this calendar crown was the base strategy which did not work out, and currently we have actually gone ahead and worked out with the Batman itself, and our current strategy is called Batman only, and this is a kind of a Batman strategy, Batman. And let's see how the strategy turns out in next couple of days. So here we have taken the risk of around 9,000. 9,000 is our risk, and let's see. This is like a gamble, and whatever rewards we get, we will get. Let's wait and watch. So the current margins are decent enough to handle all the kind of MTM swings. Now we will stop adjusting this and we'll try our luck. Let's see after 2 days where the market settles. Okay, wherever the dust settles, we'll find out if we are victors or we are the losers. Here what I can see is basically 10 lots of PE side. We can increase the risk from here. So on the PE side and CE side, let's see if we can add another 100 lots or so. If I add another 100 lots, margin available is 1 lakh and required margin is decent. Okay, if I go for limit and if I place the order, yes, this order is getting executed, and that is the beauty. Here I can then add this order also, 100 at 7.9. So this is getting rejected. Okay, this position is getting rejected. What I can do is exit this for 50 lots and buy this. So what I can do is like let it be, cancel orders. Okay. This order is executed. So what we can do is go ahead and add the upper end, and we can go ahead and sell this. The order is executed. Now let's check the margin is still 1 lakh, and with this 1 lakh, if I can go and add the downward strategy, yes, it's getting executed. Now let's look at 87,000. Okay, now that's the 87,000. If I go ahead and add this further, yes, now it's showing me insufficient balance. So we have 4.43 and 7.23. So 7.23, I'm trying to edit this position at 7.23 here, which is 11 lots, 23 modify, and 4.43 we have 12 lots. So that's our final strategy, and here we save it. What we can see is that we'll incur a max loss of 9,000 in next 2 days if the market is not moving beyond the point, and if it is moving beyond and in a few points here and there, we'll incur a decent amount of profits. So that's it for now. Thank you so much. We can just wait and watch, and these are our upper break evens. We can just mark it 21,056, 21,056. Okay, this is our mark, and the next mark what we are going to do is 21,056 and 21,645 and 21,645, 21,645, 645. Okay, so I'm sorry, click the wrong button. So this is 21,645. Here's that mark, and here's the mark. So if the market in the next 2 days moves beyond these 2 points, then we will incur certain kind of profits. If it doesn't, then incur some kind of losses. Now that was a 5-minute chart. Let's look at the 1-day chart, and from 1-day chart, let's see how this candle has turned out. So here you can see how this candle has turned out so bad, and in the next 2 days, the market sustains here, we will incur the max loss and close it. And if the market reverses and goes beyond these 2 points, then we will get some action and we will incur some profits. So wait and watch. Until then, see you. Bye bye.
Around 9:29 a.m. As you can see, market has opened slightly gap down, but it's going up. So, and
Today's RSI shows that the market will stabilize. In our strategy, the market is at a lower end, and this upper end does not really matter much because it is out of 2 sigma movement. What we can do, we can bring it to 21,800 CE. So let's just see what we are getting at 21,800 CE of Nifty. Clear. Okay, this is of 7 rupees. What we can do is we can exit this completely. No point of holding on to this. So this is 3.55 and we buy. Okay, it's not getting executed. We do it 3.6 and we do it 3.7. It's triggered, and now we go ahead and sell a 500 quantity at 7, and let's see. And the order is executed. The margins are 1.5 lakhs. Okay, 7 rupees. Here I can put it to 21,800 at 7 rupees. 21,800. Okay, here I can sell this at 7. Okay, so this is how the strategy looks like now. Yeah, at lower end it has a good, very decent peak, but at the upper end the peak is not that decent. And what we can do from the lower end, we can actually 20,700, we can bring this down to 20,700. But yes, this is negative, so we can't do much. What we can do here is save our position, check the VIX. India VIX is 15 and India VIX is very high. This VIX. Okay, but our effective VIX is 14.9. Let's save this. Now wait and watch, and let's see how the market goes. So at the upper end, upper break even is 21,902, and we'll start getting profit after 21,650. 21,650 to 21,902. 650 and 21,902 is somewhere around here only. So our region of profits had already reduced. So if the market goes up in next 2 days beyond this region, then we will incur some losses. Okay, from the lower end, what we can do, we will observe in some time. Okay, here again at the center point, and now we can bring it down to 20,800 as well. Okay, this peak we can bring it down to 20,800, and I think we should still be quite safe. So 20,800, peak it as 7 rupees. What we can do is we can exit this, and this is like 2.95. Buy it, yes, executed, and we sell this at 500 quantity. Okay, 500, and we sell it. Executed. Now let's look at the margins. We have decent margins here. This is 6.85. Okay, 20,800, 10 lots, 6.85, 20,800, 45. Okay, so this is how the strategy looks like, and now we are almost at India VIX 14.9 only. So this is how our strategy looks like, and we will face a short decay if the market moves in any direction. So we'll just wait and watch. For now, these are the margins, and let's hold up. January Thursday, and this is the expiry, monthly expiry. Now, despite the US markets being positive, the VIX of US was positive, and India VIX is also positive, but the Indian markets are going down. US markets were quite having the mixed signals. But what we want some movement over here. But unfortunately, we did not get movements. I had to adjust the Batman ears to bring this close by. Okay, now what we can do is basically adjust this further here, but I don't think this is in any kind of an adjustable range. Now whatever happens, whatever happens here, and we'll have to take those losses. And this month I think we'll have around 35,000 of losses, and that will be a very bad situation. But let's see how we can recover in the month of February and March. And I think the Batman only works best for us, and we should only try to go with Batman strategies only and not do anything else. So for now, let's wait and watch. And whatever is the update, I'll share the PNL with you. Thank you. Bye bye.
And we will put a strategy for March, and we can see India VIX is rising up 14.9. So this is a good time to put a strategy. Okay, now let's go ahead and check out the strategy which I was working on in the morning. So here we have bought the 21,000 PE and 22,000 CE. Here you can see we are going up from here, and we have sold the 20,000 PE and 23,000 CE. So if the markets swing, we will get a good profits, and if it stays in center, we'll still not get any loss. So that is good. Now let's go ahead and check the positions. Here we'll deploy it into 2:8 ratio. Okay, that is 1:4 ratio. So let's just go ahead and buy. So what we have to buy is 21,000 PE. So let's just move this up, 21,000 PE and 22,000 CE. So here we are going ahead and buying 100 lots, 100 quantity basically. So we'll buy it at 200. We'll just put all the orders, then try to adjust it. What we'll probably do 195. Okay, we'll just place all the orders and then adjust later. Here it is 369, so let's just go ahead and buy this at 360. 60. Okay, now what we can do, we can put a sell order for these two quantities. So we can just go ahead and put a sell order 400, let's say 8 lot, and we can sell this at 99. Okay, and then we can sell this again at 400. Okay, this can be sold at around 69. Okay, let me just do some experimentation over here. What if we just go ahead and increase this quantities? I go ahead for 10 lots over here, and I go ahead for 10 lots over here. Okay, then it is 22,000, and then let's move it like this, 33,000. I think we can go for 10 lots over here, and this looks very safe for me. Okay, so let's just go ahead and put this, cancel these two orders, sell orders. We can check the margins block. Margins are 2 lakhs orders. Okay, I think let's just not increase the risk. We can increase the risk in a couple of days if we see market not moving anywhere. But for now, let's just go ahead with this. So modify. India VIX is falling down. Okay. Let's modify 63.5. Okay. Now the buy orders here, it's 370. Let's go with 200. I think there is some illiquidity in this. Okay. 380 you have to buy. Sorry, very costly. So this is going in for a costly buy of 22,000, but let's come back here. So 380 and 200. So we got this for 200. Modify. We got this for 380. Just modify. And then these are 63 and 93. For 63, 45. And here we'll go for 93. Okay, these are 8 lots only. So let's just keep it 8 lots. So 10.91 Batman. Yes, so these are the Batmans. Let's go back to portfolio, open it up. Here we can see on the spot loss of 1000 rupees. That's fine. I mean, we will recover it. Margins, here you can see 4 lakh of margin is pending. What we can do, we can actually increase this. We did not get proper liquidity over here. Let's go with 100 lots. Let's go with 100. We can sell this. CE suddenly rose up after we did the selling for this part. That's why we can add 100 lots. And here we can go with 63. Okay, we can sell this and sell this at 62.6. Okay, so that was executed, and we have like 63 is same, but here we got some 94. And let's just increase this, modify, just let's do it 94, modify. Okay, let's save it. 995 we can do, 14.95 x. Now you can see the break evens are quite far away, and we have 15% as a max profit. But definitely we'll only incur like 5-10%, so the max profit is like 1,20,000. The estimated margin is 7.77 lakhs. Let's see the margins left over. Okay, 3 lakhs of margins are left over. Now we'll observe the movement, kind of movement this market does. So let's see in 4 days. 4 days our strategy will be to profit if the market is still within the 21,800 limits. So that's it for this video. If there are any adjustments, I will let you know. Thank you so much. Bye. So this is the last video of January, but we are shooting it on Thursday, 1st of February. This is 9:17 a.m. and you can see today is the expiry, but our 31st has already passed away. Now let's look at the data of month. See the monthly data of January. Here the last month closing was on 21/7/31. Okay, and this month the closing is on 21/7/25. Okay, let me do the calculations. Now for the current strategy, this is our running PNL. So because of the VIX going up after we deployed the strategy, and today's the VIX is around 16, so that is the reason we are facing some losses. This is MTM loss, so that's not an issue. Let's go and check what we basically what's the performance in January 2024, which is actually very bad. So here you can see net we lost around 35.5. Actually it was a 0.03% loss in Nifty. Now if I check around the YouTube PNL of January, unfortunately, as I had showed, the PNL is minus 35.5, so it is minus 35,500. And here if you see, this will go in red, and here if we are at minus 55,000, so this is in red. What is this calculating? Basically D7 minus G7. Okay, so expected profit is 20,000, but we incurred a loss of 35,500, so there is a shortfall. Now overall P&L profit and loss, here you can see it is minus 7,451, and our expected was around 1 lakh, so we are around negative 1 lakh, and our goal was to earn 2%. So accordingly, for the month of September, October, November, December, we have earned almost zero. Okay, we have wasted a lot. This is very unfortunate. And our new strategy for February and March, we are expected to around 20k only. So yes, let's observe how this goes, and after March we'll actually clean the slate and start a fresh slate from April, and hopefully we'll get better profits at that time. So that's it. That's the last video of the January, and whatever update is there in February, how we adjust this strategy, I'll let you know. For now, we have not adjusted this strategy. This is as it is, the way we deployed it. Okay. Thank you everyone. Bye.